Markets podcast. It's 10:30 in the UAE, at least. I'm not sure where that is for the rest of you, but nonetheless, it's early morning, half a day's trading already completed in Asia, and Brent crude oil is trading up a little bit, a 1% climb this morning on $75, just on the nose. $75 for Brent, up 1%, with the deal overnight that the Congress now has ratified this debt ceiling bill. And it's simple now that the president has to put his signature on it. So the debt deal is done. And let's kick off this morning with Neil Atkinson, former head of oil markets division at the IEA. As we sit here, Neil, at the end of the week, I mean, the debt deal was done earlier in the week, I mean, in terms of the politics of it, but now it's the fat lady has sung, so to speak. So as OPEC meets this weekend, should they be focused on the somewhat optimistic outlook, bullish outlook coming with this deal, the idea that there is a sort of an optimistic sense of the doomsday is being avoided, or should they be looking at the sort of bearish headlines that continue out of China, that the recovery there is a bit of a damn squid?
Well, I think most people thought that there would be some sort of deal done eventually on the US debt ceiling, because the consequences of not doing so were pretty awful, and could have had severely damaging impacts on the US economy and, of course, by extension, the global economy. So that has passed. And I suspect they, like everybody else, thought that would be the case anyway. So coming back to the other fundamentals, which we've been talking about now for some weeks and some months, firstly, the possibility of the US and some of the European economies going into recession, leaving aside the issue of the debt talks, that still remains possible because of the prospective interest rate increases, which we have to look forward to. The data from China, some of the PMI numbers are, not as rosy and positive as people might have expected. So on the demand side, there is, I think, greater uncertainty than the data that some of the agencies and some of the other analysts are putting out would suggest. And I think they will have that in mind when they sit down at the weekend. And the other side, finally, on this is on the supply side, where, of course, Russia's production and exports remain very, very resilient. When you look at the current volumes set against where they were before the invasion of Ukraine. And Russia is eating the lunch of some of the other producers. Huge increase in crude sales to India in particular, also to China. And of course, we're now seeing that Russian products are finding their way into various markets around the world, being the product of the refining of Russian crude. So there's a lot on their plate. And personally, I think and expect and hope that they'll leave well alone, go away, come back again in a month or whenever they next meet and look at the data afresh.
Bill Spindle, senior global correspondent at Cypher, currently in Japan. Bill, what's the sort of vantage point from there? The Japanese economy seems to be doing reasonably well, despite maybe it's because of the collapse in the yen, or certainly the serious devaluation of the yen this year.
Yeah, and also I think that energy prices have now started to recede back down to kind of normal-ish, if slightly high levels, but nothing compared to what they were last year, which was a major problem for Japan to deal with. So I think they're kind of doing better than sputtering along, which is pretty good for Japan these days.
They seem to have certainly stepped. I mean, that's perhaps why they haven't participated in the monetary policy tightening after 2 decades of stagflation, that this inflation may be even welcome in Japan after the recent decades. Given they look at the Nikkei index is back above 30,000, you would have bet your house and your neighbor's house that would never happen again just maybe a year or two ago.
Yeah, no, that's right. And they've seen a big influx of foreign money coming in. Buffett has sort of been all over the headlines here because he's upping his investments, as are a lot of other people. So things, on a relative scale here in Japan, things are looking quite bright, which means they're like I say, doing better than sputtering along.
David Rondell, former chief of mission at the American Embassy in Riyadh and the author of Vision or Mirage, Saudi Arabia at the Crossroads. David, I wanted to get your views on the growing sort of reporting around that there might be some gap in the fence between the Saudi and Russian position. The geopolitical posture or priorities of both seems to have a little bit diverged going into this OPEC meeting this weekend. Comments out of Russia saying that we don't need to make any further adjustments, cuts in oil supply. The Saudis indicating that maybe they want to sort of shock the market a little bit to get the shorts out. And they obviously also invited Zelensky recently. Your thoughts on that narrative of whether there is any gap emerging between Moscow and Riyadh?
Well, those are good points. I would just make perhaps 3 points. First of all, in general, the Saudis respond to the market, not to political considerations. There are times when they do things politically, but that's not usually the case. And I think that the earlier comments on the market dynamics at the moment were accurate. So I would agree that they probably are not going to cut this time. The second question about the difference between the Saudis and the Russians, I think the issue there really, as you pointed out, is the Saudis do like to surprise speculators at times, and they have done that in the past. I don't have any knowledge that the Russians have ever done that. So that's an issue where they might have differing opinions, but I don't think that it's going to cause them to have a falling out at this time. Again, as was earlier said, the Russians are selling a lot of oil. And what people often forget is that, what they're looking at is revenue, which is a product of price and volume. So I don't think the Russians have any reason to want to cut, and the Saudis probably are not going to confront them. And then the final thing to say, the third point, is about the arrival of Zelensky. He was attentively listened to, politely listened to, and he's been given some money by the Saudis. The Saudis are attempting to appear neutral in the conflict in Ukraine. I think they have relations with the United States, with China, and with Russia. So they don't want to be seen perhaps as taking, they don't want to be seen as taking sides in this, although people in Washington would certainly assume that by their relations with the Russians and OPEC Plus that they have. So I don't know, my conclusion is pretty much the same as your previous speakers and your polls, that I would be surprised if there's a big break in the Russian-Saudi alliance over prices in 2 hours.
Neil, the strange thing, I mean, again, this is a market that is always sort of more counterintuitive than it is maybe traditionally trading, but the EIA reported overnight that there was a build in commercial crude inventories of a significant number, 4.5 million barrels, and that in previous times would be bearish for the markets, building inventories. And here we have the oil markets moving up this morning. How do you interpret that, where the fundamentals meet the mood of maybe the debt ceiling deal or not?
Well, the weekly numbers were interesting, of course, but I've always taken the view, going back many decades now, that the weekly numbers I always greet with a certain pinch of salt, because they're revised subsequently after the circus has moved on. So it's interesting that they have gone up. There are indications of weakness in the US oil economy, particularly in diesel and in other sectors. So perhaps it's not a surprise. Maybe we are looking towards a weaker US economy, without over dramatizing it, but weaker than expected, shall we say, US economy. And the oil stocks increase are perhaps a symptom of that. So, essentially, as far as do
you think the market in general is looking at global inventories? I mean, they have come, they're in a relatively comfortable place, 10-year averages and so forth.
Exactly.
And so the market, an unexpected event isn't stressing the market out. And perhaps that's why we're testing the low 70s rather than the 80s.
And, we're into June 2023 now already. And I'm sorry to have to raise this subject, but we've got
Please.
the looming psychodrama of the US presidential election in 24 and its effect on oil markets. So what I mean by that is what we saw in 2022 is because high energy prices are obviously very controversial in the United States, particularly gasoline. It's highly visible. We saw US policy heavily directed towards ensuring that those prices were moderated almost at all costs. And I think what we will see as we move through 2023 is that stocks will probably remain reasonably healthy, which is good. And if we move into 2024 with the oil price pressure upwards, depending on the market circumstances at that time, we are well placed to withstand that pressure by releasing stocks because there will be plenty of commercial stocks available, but also the US still has, if it chooses to use it, the SPR weapon in 2024. So the stocks, I don't think, frankly, are a big deal right now. As you said, they are at pretty healthy levels. That's commercial stocks and government stocks. And I don't think it's an issue of great concern.
Bill, obviously long-time journalist with the Wall Street Journal, covering the energy and the oil story and all of those. I'm wondering how you read the tea leaves on this decision by OPEC Plus to actually meet in person in Vienna this weekend. I got a message just overnight, I think it was yesterday or the day before, saying, please come to Vienna. It seems like a very big ask for the global sort of OPEC Plus circus of, 1,000 people to sort of get on flights and head to Vienna for what would be, at least most reporting at the moment, just a vanilla rollover. Those two things don't seem to go together for me, given the sort of culture in recent times not to meet and do a simple sort of Zoom call. Your thoughts on the sort of optics here?
Yeah, I agree. There's a lot of fanfare around simply holding steady. And if you've got an invite, then you're among the few in the media industry, because many of the journalists, as you know, from
maybe that's why I got it, because everyone else was bad. Who's at the bottom of the list here? Oh, that old fella, Sean Evers. He used to come around here on occasion.
Well, and I think that's also part of the sort of intrigue around this, and it is a little mysterious. Why all the fanfare if all you're going to do is meet and then hold things steady? So, whether that's a kind of curveball they're kind of throwing at the market, as David was saying, they like to kind of keep speculators on their toes, keep people on their back feet. That may be part of it, but it's somewhat intriguing. I agree, and I don't have a clear, like maybe David's got a little more insight into what might be going on there, because I think the Saudis are behind it.
Of course, yeah, they're driving this bus. David, I wanted to get your thoughts in a post-Turkish election sort of geopolitical sort of review of the region, the jigsaw puzzle. Ahead of the Turkish election, of course, we had the announcement of Saudi and Iran coming to some kind of understanding, return of diplomatic relations, and now the Turkish election. Israel seems to have gone very quiet. Your thoughts on the sort of post-Turkish election geopolitical ripples from that and into the Iran-Saudi deal?
That's an interesting question. How does the Turkish election affect the Saudi-Iran deal?
Yeah,
I'm not sure that I see a direct connection.
I mean, these are all the big players in the region, in that sense. But nonetheless, the Saudi-Iran deal.
I think what I see from the Turkish election, Israel has gone quiet because Israel's very unhappy about that. Israel sees the Turkish government as a supporter of various iterations of the Muslim Brotherhood and sees the government there as aligned with more radical fundamentalist groups than they would like to see, and which they have confronted in their own country and other places. So I don't think that the Saudis or the Israelis are particularly happy about the outcome of the election. Certainly people in Washington and Europe are not happy about the outcome of the election, where someone who was very pro-NATO, very pro-EU, actually said that they ought to reapply to the EU, had a very Western-oriented view, was defeated. And one of the reasons that he was defeated, I would argue, is because Erdogan was seen as standing up to the West. The West is not happy with him because of his dealings with Russia, and they believe that he should be less balanced, perhaps, and some of the things he's done, like closing the Dardanelles, he did that in accordance with the Montreux Convention. What he did was perfectly legal, but the result of that, and what I say, he closed it to warships. What the reality is that no Western warships can go there, and the Russians already have plenty of ships in the Black Sea, so that it's effectively a boon to the Russians. So he's done things which antagonize the West and NATO and Washington in particular. So they're not happy. But as I say, I think that Western media drumbeat against him backfired, in the sense that the Turkish people said, you know what, we don't have to listen to the West.
But I suppose from the point of view of the Middle East and the wider sort of Levant, Middle East, Gulf area, he is the known entity. The Iranians, the Saudis, that obviously they know him, and in that regard, the status quo is maintained. And does that, do you think, from the point of view of the Saudi-Iran rapprochement, is it on a good footing? Are you seeing any details, anything that would indicate, okay, this is going to work, this is going to last? We've had the OPEC Secretary General visited Iran the other day. The Omani leader, the Sultan of Oman, went to visit. Are we now seeing some roots to this rapprochement?
I think it's too soon to say. I think the antagonisms and antipathies between Iran and Saudi Arabia are very deep. I think the extent to which the Iranians continue to try to develop nuclear weapons is certainly an issue. Certainly an issue with Israel, and that will affect the Saudis. So no, I think that it was a positive step, but it was planting a seed which has yet to take root. And is growing in some pretty dry soil. So I hope that and I think that the most immediate outcome will be in Yemen. I think there will be some impact there, that both sides wanted to come to some conclusion of what was going on in Yemen. So that part will probably stick. But whether there's some kind of long-term friendship developing between the two opposing poles of the Islamic world, both of whom think that they should be the leaders of the Islamic world, I think that's as much something in progress. We'll have to wait and see.
A work in progress. Neil,
sorry,
Bill. Yeah,
I could just add real quick there. I think the biggest win for outside of Turkey is this is kind of a win for this somewhat prickly, non-aligned movement among countries that are basically in the Western orbit, but like to play the unilateral game as well. China, India, Saudi, those countries, and I think this is a win for them in the sense that it continues to show there is room to operate somewhat independently and still remain within this broader kind of Western orbit. And I think that is where the Iran thing comes in, is that they'll feel that there is some room to kind of maneuver in there.
Interesting. Let's get the survey question in, and it sort of touches on a little bit what I was asking earlier, which is relevant to OPEC, meaning which should OPEC Plus be guided by when they meet this weekend? The sort of bullishness of outlook from the debt ceiling deal, clearing the clouds for economic growth, and whether we will see a reemergence of, there's been a lot of chatter in the last few days now, again, back to the interest rates and where the Fed might go next, or should OPEC be guided by the bearish signals from China and the sort of low manufacturing data numbers there, reports today of half of the Chinese provincial governments are in a debt stress situation. We might say that probably for the half the municipal governments of any country, but nonetheless, that is the report out of China. So does OPEC Plus follow the bullish mood coming out of the debt ceiling deal or the bearish weak China data. Looking at that, Neil, from the point of view of the lifting of this, what has been a very distracting story, even if, as you said in your earlier comment, we all knew that we were going to end up at this place, but nonetheless, we still went through a month of noise in which it sort of smothered everything else. Does its removal off the stage of headline domination allow for other matters to emerge, and what will they be, do you think, in terms of their tone and impact for the direction of the market?
Well, now that this psychodrama over the debt is over, which, I repeat, I think most sensible people realize in the end something would be done because the consequences of not doing so are too terrible. No, the attention now switches back to the good old market fundamentalists. Forget all this talk about flushing out shorts, whatever that's supposed to mean, and all the rest of it. It's about the fundamentals, and you hit on it there with China, is that we are still not clear because, as I've said before on previous appearances on this show, that data from China is not as reliable as it should be. And we need to recognize that. It is not as transparent and timely as we get, say, from the US, which is the gold standard. So we can't be clear, but the PMI numbers that you refer to are weak or weaker than expected. And I think this is the big driving factor because China is expected to contribute at least half of the growth in global oil demand in 2023. I think pretty well everybody agrees with that. Even though they do disagree on what the total global demand growth will be. China's going to be a huge factor. If it is weaker, and if we do get higher interest rates in the US and in Europe and elsewhere, which will temper demand growth in those countries as well, then we are looking, I think, to a weaker than expected market in the second half of 2023. But we're not calling catastrophe here. We're saying it will grow less strongly than we expected.
Well, the IEA and OPEC data is indicating, a 2 million barrel a day bump up in the second half on global demand, mainly driven by China. Do they need to get back in the drawing room and revise those numbers?
Well, far be it from me to tell my former colleagues what they should be doing, but I think, well, knowing how the process works in amongst the agencies, it's a continuing process of new data's coming in. There are revisions to history, which are constantly plaguing us. And obviously, macroeconomic factors and geopolitical factors are factored in there as well. And I think that as the next few months come along, the agencies and other institutions, by the way, which do have very bullish demand growth numbers, I think they will start to cut those expectations back. I'm not saying it's going to be dramatic. The IEA is suddenly going to go from plus 2 million barrels a day to plus 1 in 3 months. That's not going to happen. But I think any changes the institutions make to their demand outlook are overwhelmingly more likely to be the downside than they are to the upside.
Bill, you're now taking up a new position as senior global correspondent with Cypher, which is a news organization focused on the climate change challenge and the technology being deployed or needed to get to net zero. And I wanted just to ask you your thoughts on whether this report we have out of China today, that temperatures at 446 Chinese weather stations has reached or exceeding record levels for the month of May. Where does China face that challenge of the great climate challenge? They have challenges with water and other things. And how immediate is that challenge, do you think, and its ramifications?
Yeah, I think more immediate than many people think. You see this both in India as well, where you see temperatures really consistently quite high, and we're into a new climatic, El Nino cycle that probably will mean higher temperatures over the next 5 years generally. And it's really a big issue in both those countries because the general response is it gets hot, people crank up their air conditioners. That means more electricity, which predominantly vastly comes from coal. That means more emissions, which leads to higher temperatures. So it's really a big a big problem that I think is more urgent and immediate than many people see as we meet here day to day talking about energy markets. And that's why you're seeing China move really dramatically in terms of renewable energy, even as they crank up the coal production as well and are approving new coal plants. They're also approving really eye-popping amounts of renewable energy, solar, wind, pretty much everything. And the electric vehicle market there is absolutely booming. So,
there was reports earlier in the week where one of the respectable agencies, FGE, had put China peak oil demand as closer as the sooner than most had thought, 2026, 2027, as they do sort of accelerate their transition to low carbon and if you like, from the point of view of gas, at least, and move away from coal. But that's hard to see right now.
To some extent, yeah. Though I think over the longer term, I'm kind of talking my book here, but I think this, that OPEC in some ways is making the same errors they did with shale, thinking that it's not, we can keep prices high because we need that revenue, and they especially need that revenue to make their own energy transitions right now. But to the extent they keep it high, that puts pressure out in the market to find alternatives, and the alternative is not really shale anymore. The alternative is electricity and renewable energy. And that will, I think, be a real undertow on energy demand over the longer term, 3 years, 5 years, 10 years.
Let's give our shale oil producer, David Rondell, a chance to comment on that, get the survey result up. But David, so where is the results in this room? Bearish. OPEC should be guided by the weak China data and not the optimism with the debt ceiling deal. But David, I wanted to get your views on the story that was reported overnight by citing the ExxonMobil CEO, Darren Woods, saying that Exxon would double the amount of oil it produced from U.S. shale holdings over the next 5 years with the emerging new technologies. There's still a lot of role for technologies to surprise here on the shale patch. Your thoughts on that?
Well, I don't want to sound like an arrogant jerk, but I've said it on this program at least three times that production in the Permian Basin is not going down. I mean, because a few venture capitalists decided not to invest because they lost money because they made dumb deals. That's
U.S. production last month hit 12.6, nearly back to pre-COVID levels.
Yeah, and and now the head of Exxon says he's going to double his production or some
in shale with technology, not shale. New fields, but just technology.
Yeah, new technology, and that's the whole story of the shale revolution. It's all about technology. The shale's been there for a long time. Fracking's been there for a long time. People just keep finding better. And when we started, what were they telling you then? That it varies from field to field, but they were saying it costs $60-$70 a barrel to get shale and shale oil, and now then it's down to 30. So it's about technology, and technology keeps getting better. And I read the thing that Darren Wood put out, and it's not radical new technology. It's about longer horizontal wells and better proppants. Okay, so these are incremental improvements. This is not some new. He didn't just invent the light bulb or something. He just found ways to incrementally do what they're already doing better. And I think that's an ongoing story. So yeah, I think shale production is going to keep going. I think that you also have seen now that WTI is basically taken over Brent. Speaking as a Texan, I think they should have changed the name from Brent to WTI rather than add WTI to Brent. But that's what they wanted to do because that's their brand. And but I think that says it all. WTI is a very robust market, and that's why it was added to the Brent basket.
Which started yesterday.
Can I ask one question myself?
Yes, please.
That is, what percent of China's electricity is today produced by coal, and what percent is produced by renewables? I'd be curious to know that if our speaker from Cypher knows the answer, because I don't know the answer.
I don't know the exact answer, but it's up, well into the above 2/3 probably.
From coal?
is from
Coal.
2/3 is from coal. So they got a ways to go before they can count on
We have
wind.
very, very long ways to go, but the rate of change is pretty rapid.
Okay, fair enough.
Yeah. Well, we'll leave it there with the weekend ahead of us. Usually surprises come on the weekend because it gives the market a few hours to digest. So I would say one should be alert to OPEC not simply doing a rollover this weekend, but we'll wait and see where that goes.
Not during the FA Cup final, I hope.
Well, as long as Man United wins, that's the only thing that matters. No, the other thing, of course, in this equation is supply. I mean, we're talking about the U.S. production getting up there, 12.6 last month and climbing. Venezuela seems like it's got a heartbeat again in terms of its oil industry. Iran exporting as much as they can. So supply seems to be growing with the Russians having no interruption. So with a weak outlook, then, I mean, forget about all the other things, but just supply, ample supply might be a reason why OPEC Plus needs to revisit their position. We'll wrap it up there with Brent trading just $75 on the nose, and we will look forward to the weekend and see where it goes. Thank you very much to our team this morning, David Rondell, Bill Spindle, and Neil Atkinsons. Really appreciate your time this morning and insights. Have a great weekend, everybody. All the best.
Thank you.
Thanks to be
Good weekend.
nice to be with you.
Cheers.
Take care. Bye-bye.